Ladies and gentlemen, good day and welcome to the H1 FY26 results conference call of AVP Infracon Limited, hosted by Kirin Advisors Private Limited. As a reminder, all the participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ganesh. Thank you, and over to you, sir.
Thank you, and good afternoon, everyone. On behalf of Kirin Advisors, I welcome you all to the conference call of AVP Infracon Limited. From management team, we have Mr. Prasanna, Chairman and Managing Director, and Ms. Priyanka, Company Secretary. With this, now I hand over the call to Mr. Prasanna. Over to you, sir.
Very good afternoon, everyone, and thank you for joining us. On behalf of AVP Infracon Limited, I extend a warm welcome to all the participants to our H1 FY26 earnings call. I am joined today by Ms. Priyanka Singh, our Company Secretary and Compliance Officer. I just wanted to begin this with a brief introduction. AVP Infracon Limited was founded in 2009 with a mission to build high-quality infrastructure that supports India's growth. Over the years, we have established ourselves across highways, bridges, flyovers, irrigation, and urban development, backed by engineering precision, timely execution, and a strong culture of quality. We have completed several important projects. Among the important projects what we have completed, we have NH works, NHAI works, state government works. On the execution side, we continue to work on large and complex projects. As of now, the ongoing projects such as the four-laning of Tirukkoilur-Arsanur Road, which is valued at 86.5 crore, the strengthening of NH-226 valued at 40.3 crore, the strengthening of Trichy-Tanjavur NHA work, which is valued at 30 crores, likewise. Let me now turn to financial and operational performance for H1. This has been a particularly strong period for AVP, marked by sustained execution momentum and the benefits of the work we have put in over recent years. H1 FY26 stands out as the strongest half year in our company's history. Our revenue grew by 79% year-on-year to 195.7 crore. EBITDA increased 87% and stood at 44.7 crore, with margins improving to 22.9%. Net profit rose to 23.2 crore, an 82% increase over last year. This performance reflects disciplined bidding, strong on-ground execution, and a growing contribution from our expanding order pipeline. On the operational front, H1 was extremely active. We secured new orders of around 124 crore across highways, bridges, and industrial infrastructure. Key wins include a 39 crore performance-based maintenance contract, a 16 crore ROB, railway overbridge project on the Singanallur-Pelamedu stretch, a 33 crore industrial infrastructure project for the Mappedu Multimodal Logistic Park from Reliance, and the strengthening of NH83 from NHA worth 10.6 crore, which is an additional work on the ongoing Trichy-Tanjavur NH. We also received a 24.6 crore contract for infrastructure creation at the Sipcot Industrial Park in Manappuram. As of 30th September 2025, our unexecuted order book stands at around 475 crores approx, and our big pipeline remains strongly at around 1,500 to 2,000 crore. This gives us clear execution visibility for the next 18 to 24 months, and we expect a strong ramp-up in the second half. I'm also pleased to share that we have started H2 on a strong note. In early November, we secured new orders totaling 78.75 crore across highways and industrial infrastructure segment. We have received L1 status for a major 57.57 crore widening and strengthening project of the Thiruvannamalai-Thiagadurgam Road. We secured a 12.77 crore order from Reliance Nappedu Multimodal Logistic Park for internal road and infrastructure development. We also received a 8.41 crore order for RCC drain and OSBL works in the same logistics park, which are all added to the existing work which have been awarded from Reliance. Together, these early wins in H2 reinforce the momentum carried forward from the first half. We have also issued 40 crore of convertible warrants with the promoter group subscribing to 75% of the issue, a strong endorsement of AVP's long-term strategy and potential. Before I move to the outlook, let me touch on the broader industry environment. India continues to see one of its strongest infrastructure cycles, supported by a government capex outlay of over 11.2 lakh crore for FY26, around 3.1% of the GDP. Highway construction has remained robust, and investment in logistics, multimodal transport, and industrial corridors continue to rise. This environment is supportive for EPC company like us, and the shift towards larger and more integrated infrastructure projects plays to AVP strengths. Looking ahead, our priorities are clear. We look to widen our business horizon, which currently faces concentration risk, by expanding beyond Tamil Nadu. That remains our major focus area, and we target to achieve 25% to 30% revenue from other states in the next financial year. Maintaining strong margins and disciplined working capital management will continue to guide our execution as we scale. The solar EPC division, introduced earlier this year, is being developed as a meaningful long-term growth vertical capable of participating in larger opportunities. From FY27 onwards, we plan to selectively enter private and industrial infrastructure projects, which will further diversify our portfolio and strengthen our revenue mix. To conclude, H1 FY26 has been a milestone period for AVP Infracon. We have strong financial momentum, a strengthened balance sheet, and a healthy order pipeline. We do have a favorable industry backdrop. With this foundation, we are confident of delivering a strong performance in the second half and continue our growth journey. Thank you once again for joining us. We will now open the floor for questions. Glad to answer you all. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Smith Jain from K-Tech Family Office. Please go ahead.
Yes, hi, good morning. I just want to firstly, congratulations on the great set of numbers. I wanted a couple of clarifications, right? So, although we've, doubled down on the revenue bit, vis-a-vis the first half of last year, if I remember correctly, in the last on call that we had, you'd mentioned that we're targeting the full year, we are targeting a revenue of 550 to 650 crores for the entire year, right? And that is going to be spread across both our verticals, solar EPC and the road vertical, wherein road vertical would be 550 or, 500, 550 crores, and 100 crores is going to be on the solar EPC vertical. We've done 200 crores in the first half. So are we saying that, we are targeting a revenue of 400 crores in the second half? Like, is that possible, or is that what we're targeting?
So thanks for your wishes, first of all. And To make this clear, always, H1 is 40% of what we do in the H2, minimum 35 to 40 percent of what we do in H2. We are very clear in that 500, what we have given the guideline. Standalone basis 500, and anything above, over and above that will be happier. And this solar and other, consolidation with other subsidiaries, we are targeting at another 50 to 100 crores. So this is our target. This remains the same, and it is not taken back or reduced at any point of time.
Okay, fair enough. The second question I had in line with this was that our standalone revenue for this half is 190 and consol is 195, right? And I'm assuming the PEB and the solar EPC is into a different subsidiary, right? Both these verticals. So we've only clocked revenues worth 5 crores in this first half. And just wanted to get a flavor on what sort of orders, what sort of target you mentioned, but what sort of orders, what sort of work are we going to complete in the second half with respect to these two verticals?
The PEBs, we are not taking it to any subsidiaries. We are doing it on the main company only. Pre-engineered buildings are sticking onto the main company. And when compared, when this solar is concerned, this is actually, we have started in the first half only, and we have not made any order, any sales on the bigger side. So we are doing low on this. And we have confirmed order for around 15 megawatt, which we have applied for all the approvals. As you know, the approvals take time. Once this approval is done, we'll start the execution. We are targeting at the fourth quarter billing. Maximum we'll do it by fourth quarter. And if some delays happen, it will go to the first Q1 of the next thing. But with the execution, we'll be starting positively in the first January 1st. That will be in the Q4.
Okay. So what we're saying is the 500 crores standalone is something that we already have an order book for, visibility for. And for the console level, 100 crores that we're targeting, right, the 50 to 100 crores. Currently, we are waiting for the approvals to come in. Post that, we'll start the billing and the execution work, right?
Yes, correct. We have the orders. Once these approvals are in place, we need a government approval for the establishment of solar parks and something. And we have applied for the same. Once it is done, then we will be in a position to mention when this project will be delivered on something. So we are on target on that, and we will during the last con call only, we have increased this guidance of the solar. We have not mentioned anything before that, and only based on the order what we have confirmed. This is from a regular customer of ours, and we are moving hand in hand for the approval. So once this approval is obtained, we'll be making an announcement about the order procurement, and we'll start the work also.
Fair enough. And just to understand what we're doing on the PEB front, right, I'm assuming that is also a fairly new vertical that we've started. And PEB itself is picking up really fast in India. So how big is the opportunity? What sort of plans, vision do we have for that vertical? And if suppose, you can give some flavor with respect to the kind of interactions you're having with customers, will allow us to bake in, some notes going forward.
Pre-engineered buildings, this sector, we are very fresh in this, and we have started doing this analysis last quarter, and we are in the initial phases only. I don't expect much of revenue from PEB structures this year. We are anticipating on a longer run. We are anticipating something in the next financial year. We have some these buildings and other thing. We have now taken fresh order from Reliance, which will be executed in this. Apart from this, the other orders what we are planning will be executed in the next financial year only. I don't foresee any orders that will be executed and completed and built in this H2 from pre-engineered buildings.
Okay, fair enough. And the last question that I had was, with respect to our business model. So currently it is predominantly road EPC, bridge EPC that we are doing. And just to understand going forward, what exactly is our focus going to be at, right? Because I'm sure that Tamil Nadu, the entire infra space, the infra story in Tamil Nadu is really huge, right? I was attending a con call yesterday with an EPC company, which is also into waterworks in Tamil Nadu. They were also very bullish. So I just wanted to understand, going forward, is it just that we'll be restricted to the road and bridge story, EPC story, or is it that we want to expand our product portfolio, service offerings also? And if yes, then, what sort of sectors or segments are we looking at?
At the moment, we are core road and bridge player, and now we have started diversifying into pre-engineered buildings and solar. Once we get settled down in this, and once we start this flow like a river, which there will not be any interference or hindrances, which takes a slow pace for running, then we will target at something at the next thing. We want to go baby steps. We don't want to run all the time and get into any trap. So we are targeting at going at the moment we are targeting at this pre-engineered building and solar EPCs, apart from what is our bread and butter. So after this is getting good, then we will think about other things.
Fair enough. But like within our bread butter, are you seeing like what sort of traction are you seeing on the demand front? Like, is there enough scope for us to continue growing at the pace that we've been able to in our bread and butter segment, or you feel that there is some slowdown or there is going to be some saturation after a point and we'll have to look at like other avenues? Just wanted to understand on that lens.
So 2 lanes will become 4 lanes, 4 lanes will become 6 lanes, 6 lane will become 8 lanes. This is an expanding industry where you will not see any downfall or something. Even if I'm not getting any PEB orders or solar orders, I can sustain very well with what we do in the roads and bridges. This is the industry which will keep on growing and growing. Only thing is we'll be doing the same thing what we are doing. We need expertise in managing the cash flow and managing the men, managing the machineries. If we are good at it, we can do wonders in this. Nothing else.
And the geographic...
Pardon?
The geographic diversification, like, are we currently also looking at other places apart from Tamil Nadu, or?
We are looking to expand beyond Tamil Nadu. We have applied for 2-3 tenders, which unfortunately we were not L1. And as I said, I've earlier told in my con calls also, when someone asks me, you want a healthier order book or a healthier P&L
margin.
I want a healthier margin. So we are very conservative in bidding. If I would have gone 2-3% less, I would have had an order book of around 1,000 to 1,500 crores in my kitty by now. But I do not want to do that. See, we are here to do business. We are here to make money. We are here for the welfare of the company, employees, stakeholders, everyone. We are not for any boosting our order book and showing big order book and making loss somewhere. So that is the reason we did not go out of the box and bid anywhere. We are bidding conservatively. We lost smaller margin only. Anyhow, we had a good lesson and we studied where we lost and all. We are working on it and we will try to increase in those segments.
Fair enough. I'll fall back in the queue. I have more questions, but I'll fall back in the queue. Thank you so much.
Yeah. Thank you.
Thank you. The next question comes from the line of Pranav Pal from Prudent Equity. Please go ahead.
Good afternoon. So I had a few questions. I'm audible, right?
Yeah. Good afternoon, sir. You please proceed.
Yeah. So you kind of double backed on that 550 to 600 crore guidance, right? So, and you just got orders, and I'm assuming these orders take time for the execution to really start. So that 400 crore additional revenue in H2 seems kind of unachievable. So what are your comments on that? How do you plan to achieve that?
So I have always mentioned about this. We have this numbers, what we have done is already for H1. And after that H1, we have almost a month and a half passed, and we have done quite a lot of billing. And we have some work in progress, which will be billed everything. So the work in progress which were not billed during the H1, we say we have billed in during this 2 months, and we have works which has to be executed and all. So this what unexecuted order book, what we are mentioning, we have quite a lot of opportunity. We are self-sufficient to complete this and close this order book. C3, we have already completed almost approximately 200 crores, and last 2 months, we have billed around 70 to 80 crores. So we have around 230 crores, which we have around 400 crores of unexecuted order book, which will be completed in March, so that there is no chance of dropping back in this. So 500 crores plus 500 plus what we have already given guidance will be done. This, apart from that, what we are getting is from solar industry. If you have attended the last con call, we have mentioned the guidance was given for 500 from the standalone. Apart from that, what we have given is for the consolidation.
I think I missed it. How much have you booked until now in H2?
No, sir, one second. Sir, one second, sir. We are not supposed to disclose the figures, actually. I wanted to stop you there. Please don't disclose any figures for H2. We will be doing some sort of disclosure, maybe quarterly. Sir, we can do that in NSC, but right now in this call, I'm sorry, we cannot do that.
I think, okay. And additionally, you said that to maintain the numbers that you said, you need an order book of around 750 to 1,000 crores, and also to maintain a book-to-bill ratio of 1:2. So I'm struggling to understand how FY27 will look like.
So we are bidding close to 2,000 to 2,500 worth of tenders, which are in pipeline. So we are expecting at least 25% of what we are bidding to be in our favor. So this will turn out to be in our favor before the month of March or before the year ends. So that will be sufficient for us to operate for the next year. And we will have tenders coming up continuously. So we, as I mentioned earlier, we don't have much of order book in my order bank or something like that. And we have shorter term order books, so 1 year to 18 months. So we keep executing, and once we close some orders, the fresh orders keep coming. So this is not an issue about the longer run.
Because until now in FY26, since the year has started, the order run rate is only 202 crores. So yeah, that gives me okay. And is there additional L1 orders that are yet to be filed for that you've got already?
We have some orders to be published. Once we are received this L1 status, we will be announcing that.
Okay. That's all. Thank you.
Thank you.
Thank you. The next question comes from the line of Samrat Shah, an individual investor. Please go ahead.
Hello. Sir, am I audible?
Yes, sir. You are very much audible.
Sir, first of all, congratulations for a fantastic set of numbers and a great result. And also about the margins that you have improved. Most of my questions have been answered. I had a few questions regarding the margins. With the increase in revenue, and you just mentioned that you don't compromise on just for the sake of bidding. You like to maintain your margins. So if there is an increase in revenue, is there a possibility of improvement in margins with the economies of scale coming into play?
Sir, always there will be, when the top line grows drastically, the bottom line will be vice versa. Bottom line will be reducing only. See, when we are targeting some geographical expansion or something, there may be some decline in what we are getting in our own home ground. When we move out of states and participate in a new territory, we will not be getting the comfort of working in what we are getting in our hometown or our home state. So that, Those things were the possibility of what we were considering and we were quoting. So I don't think there will be increase in any profit margins much above than this. So we are working on to sustain those margins.
Okay, sir. And one more question regarding the solar EPC vertical that we are going to enter. So what kind of percentage share are you looking for solar EPC and going forward, like in the, say, next 2 years, in your regular business of roads, bridges, and highways and solar EPC, what would be the percentage contribution in both?
So we are in the initial stages of the solar business, so we are targeting somewhere around instead of talking about the percentage of top line share from infra and EPC, road infra and the solar EPC. I'll just say that we are targeting somewhere around in the next year, we are targeting a minimum of around 150 to 200 crores top line from solar EPC. So this is what we have planned. So we are working towards that.
Right, sir. And one more thing, sir. I really like the way that you honestly admitted that you had participated in a few tenders and which did not go into your way, and you have learned a lesson for future decisions. It is a great thing to know that because it is difficult to admit something like this in a phone call. So I would like to congratulate you for that as well, sir. And all the best for the coming quarters.
Thank you. Thank you very much.
Yeah, thank you.
Thank you, sir.
Thank you. The next question comes from the line of Ajinkya, an individual investor. Please go ahead.
Hi, sir. Hope so you remember me. First of all, congratulations for the great set of numbers.
Thank you, sir.
As I know you are a very honest person, that's why I am a long-term shareholder of your company. Despite I am not getting anything since last 1 year, still I believe in you, sir. I have only 2 questions, sir. The first question that irritating me since you mentioned in last last investor call, sir, that is the big dilution you are doing in EPS or via QIP and warrants. So what is the plan for it, sir? Why we are, raising such high amount, likewise 150 crores via QIP and warrants, sir?
Sir, can I answer this one?
Thank you. Thanks for the trust you have in me. And yes, Priyanka, you can please answer it.
Sir, actually, as far as this QIP is concerned, we just wanted to take a blanket approval for 110 crores. It's not 150 crores. So we were planning to do a blanket approval, but we are not raising the funds all together. I just want to clarify on that. And sir, warrants, sir has put in, actually this is maximum promoters, sir has only put the warrant amount. And as far as QIP is concerned, sir, we are going for around, I think 50-60 crores we are just raising. And raising because, sir, the company is growing, our top line is growing, we are having a lot of work orders coming up, we are doing a lot of bidding which is going to take place. That's the reason we have decided for around 50-60 crores only fundraise. And again, we are going to do it in tranches also, sir. So it's not that they are going to do it in one shot. And we are also ensuring that whatever QIP, whoever investors are coming in, we are looking for an association for a long term. We are definitely not looking for investors who's going to be there for a short period of time. We are looking for somewhere 6 months and 1 year time. So that also we are taking care of, and that is one of the reasons why we are still in this process, and we have not just like the raise the funds till now. So this is it, sir. You be assured of it, sir. Even if we are going for QIP, it's just a blanket approval, and we are being very choosy about the investors who are coming in, ensuring that they are going to be long, in association with the company.
Yes, thank you. That was a very big concern I was having, sir. And I know, sir, whatever you give the guidance, 100%, 101%, I am confident more than you that you will achieve it. So I just want you to clarify that on next year, are we targeting for 750 crores of, guidance?
Yes, sir. Definitely, we are targeting somewhere around 700 to 750 crores we are targeting.
Okay, sir. Okay. Our last question, sir. Are we going to publish quarterly results, sir?
So once this QIP happens, we are bound to abide by the main board conditions, everything. So once if this happens, if it happens, we are bound to do that, and we will be doing that. Even if we are not, if not, we are not publishing, we'll be giving update at least to the investors.
So in fact, we have been doing it for the last 2 quarters. We have been keeping updating our investors about at least the percentage of approx percentage of revenue growth that we have been achieving. So that also we are doing it, sir, for the last 2 quarters.
Yes. Okay. That's it from my side, sir. All the best, sir. All the best.
Thank you, sir. Thanks for the trust and the applied appreciation towards the company. Thank you. Thank you so much.
Thank you. The next question comes from the line of Umang, an individual investor. Please go ahead.
Hello, sir. First of all, good set of numbers. Really appreciative.
Thank you,
sir, I have just follow-up questions. Most of the questions have been answered. I have questions regarding working capital. Sir, top line is good. Everything is good. In terms of margin is also good. But what is my concern is working capital days have been shooting upwards. And in the recent cash flow statement also, trade receivables have been shooting upwards only. So I want just want to know specific reasons. Is there any lack of efficiency in collection regarding in trade receivables or anything from your side? Because in past quarters also or half-yearly results also, operating cash flow from operating activities is consistently negative. So any specific reason can you guide for?
Sir, I'll reply to this. Sir, first, I'll just do it point-wise. First of all, this time our operating cash flow is a positive one. Standalone is around 10 crores and the consolidation is 17 crores. Secondly, sir, your concern for trade receivable, I just want to clarify, right now we are having a balance of 85 crores. Major reason because in the month of September alone, sir, we did approx 70 crores of billing. And we, as an EPC contractor, have a collection period of 90 to 120 days. But it's not for everyone. Sometimes we do have a collection period within 60 days also. So the main reason is 85 crore being in the balance for trade receivable is because around 70 crores we did the billing in the month of September. And sir, other reason the working capital going high is not because of the trade receivable or trade payables, because trade payables is standing at 20 crores right now, which again I'm telling you with confidence that sir, if you go and check any website, any companies, they will not have such a low trade creditors. We are making the payment of creditors on time. In fact, we are giving them a lot of trade advances, and of course we are also we are getting good discounts from them and all. We are enjoying that, so that's the reason our PAT margin is also intact. That is also one of the reasons. So the main concern over here is for inventory. So in inventory, we are having around 82 crores. In 82 crores, sir, around 65 to 70 crores is the unbilled revenue. So for all EPC companies, we do have unbilled revenue, sir. And most of the companies show this unbilled revenue in their revenue itself, but we don't do that. What we follow is what exactly billing we have done. We show it in our revenue, and unbilled revenue forms a part of inventory, which eventually within 2-3 months we actually build it. And this is why this working capital is little high, sir. And definitely it's because this working capital is a little high and we do need funds. That's why we are going for QIP, since the company is also growing. But other than that, debtors and creditors are actually in a good position, sir.
Ma'am, I have just one follow-up question regarding that. In last con call, which was in May, you mentioned about factoring or bill discounting options. You were exploring in some trade receivable category, if I'm not wrong. So I just want to know whether it is working or not working in favor of your company.
So we have not started this trade factoring for us till now for bills receivable. Mainly because, sir, it is all state government projects which we are doing, all government projects, state government and central government. So billing collection is not a problem for us, sir. But then there is a particular time which we need to collect, and we have our receivable days between 90 to 120. So since our billing for the month of September itself was around 70 crores, so that's the reason why this receivables is standing at around 85 crores, sir.
Because sometimes when I see your debt profile also, it is very good. No questions about it. But seeing your debt piling up, I have questions regarding interest, rising interest burden on the company. So any specific reason you are doing QIP for reduction of debt or only working capital reduction?
Sir, we have, since our company is growing, we do have a bank coming up to us for the CC limit and availing debt and all. We are still eligible for that, but we are actually not going through that debt line, and we are thinking of going through this equity, so that this burden of this finance cost and all is also not too much for us. So we are trying to come into a position where debt and equity ratio is actually fine, and we are trying to, strike a chord between that. So that is how it is. Since we are a growing company, we'll definitely need funds. There's no doubt about it. But definitely we are not going for any more further debt. So whatever debt we are having is currently that, and whatever debt you are seeing in balance sheet is not alone this working capital debt. It actually it has a part of directors' money also, which was given to company. Part of it is as a term loan, which we take it for equipment and machinery. Because if you see, it's a capital intensive market, and we have most of our machinery which is owned by the company itself. So that is what, and when we have compared also that owing a machinery is much better than going for hire purchase. We saw that owing is anyways better, as some of, in terms of performance, in terms of cost effectiveness, everything. So that is why our company is majorly, like 90-95% of assets are all owned by us, sir. So this what debt you are seeing is not alone for CC limit and all. It includes everything. And definitely we are not going further for debt raise. That is why we are actually going through equity raise.
Okay. Thank you very much. Thank you.
Thank you, sir.
Thank you, sir. Thank you very much.
Thank you. The next question comes from the line of Paras Cheda from Purple One Vertex Ventures. Please go ahead.
Yeah, good afternoon, sir. First of all, congratulations, sir. This a very strong set of results, and you've been delivering quite as per, sort of expectations and projections that you said. Sir, just two queries, a couple of queries which I have. One is, what is the current order book level, sir?
It stands at 475 crores, sir, unexecuted order book.
Okay. Understood. And so that for now and some additional would be sufficient to execute that 500 standalone and whatever additional little bit from the EPC business. And, right, correct. Okay. And sir, for FY27, on the standalone, what we are aiming at 700 or 750 in that region, would that be achievable with the, order wins which we were discussing a while ago, I think, some of the other guys. So, the kind of order win that will be required for that, would you be confident of that, sir?
Sir, 100%, sir. I'm into this business for the past 16 years. We have never fell short of any orders at any point of time. We just have this order book suffice for this year and the next quarter, what we'll be executing, and whatever orders we are winning in this current off-yearly and the next current off-yearly and the first Q, and that will definitely help us to finish FY27 of what we have targeted. So
right.
Getting this order book will not be actually every investor are having this fear that the order books are less. Even every time when someone is asking about the order book, I've been telling the same only. Whenever we are not winning any order that's in the size of 1,000 crores or 500 crores or something like that. The thing is, We win small orders, we win the sizes of what we can execute, and that is adding quietly to our portfolio, and we are executing whatever is necessary, and we are always good to go with that.
Right. It's just that, sir, because a lot of these orders come quietly to you and, most of these are not disclosed to the market. And therefore, there remains a little bit of that, anxiety amongst the investors that maybe, the order win is probably limited to achieve our target. But, if you're confident, then, you've been in business for long, so we'll go by that maybe. And, sir, in terms of operating margin, so far you've held it very, very well. And of course, I do understand you have lost a little bit of business to maintain our margins, which is also very good. So you, the next year projections, you still maintain reasonably healthy margins of 20% and plus EBITDA margins?
So this EBITDA, what we are doing, we are confident of maintaining that. So we are working towards that only. We have a strong financial team which works for this, and we give targets for the completion. Every week we monitor the progress as well as what has been the budget and what has been the expenditure. And if it is something falling short, we have calls and we take up those and we maintain all these things. So this is, it's something like what I have learned from stalwarts like Reliance and all. I've seen their follow-up. They don't go to field, but they sit in the office and they run the business only with Excel, Microsoft Excel. So this is something which is now the way of business what we have been turning into. And we are doing good at it. We are doing good follow-ups for the execution team and the management team. We are having a good backup call every week. So we are very much strong and maintaining this profit margins.
So then, the government, of course, the intention is clear in terms of the spending, etc. on infra. On ground, do you see, is there any sort of, whether paucity of tenders or, limited tenders being sorted out, or irrespective of the government intent to spend more, but, in general on ground, is there healthy demand? In terms of tenders, etc., anyone going forward? Or is there a little bit of a lull for now?
The demand for the works has always in the rise. So every infrastructure, this is just the second sector after defense. I always tell that on the border roads, whatever India spends on these borders and the defense sector, it is almost equally spent on infrastructure. So this demand.
So there is a paucity of demand and maybe even at our margins.
Pardon?
So there is a paucity of, let's say, tender demand for us, let's say, and or offers for us, let's put it that way, and probably at our margins. There is enough work.
There's enough work. There's enough work. Nowadays, the government has come up with in very stringent conditions. These HAM mode projects and all, which we are not doing actually at the moment. HAM mode projects, earlier the net worth of the company is calculated only once. Even a company with 100 crore net worth can participate in 10 works. But nowadays, to give the works equally, equally to all the companies, what if we have taken one work and our net worth is 100 crore and that pre-qualification for that tender is 70 crores. That 70 crores is nullified and you will have a net worth of 30 crores only available for you to participate in tenders. In this way, much of the companies, they cannot take 4 or 5 works and have it in their bank and all. Now, the order book for every HAM companies also will start declining. So it will have a standard size of order book, and that will be good for a growing company like us to participate in many books. So that will not be short of any projects.
Right. So just wanted to say that, since we'll be dealing most of our contracts will be with the government or the central, public sector undertaking, the cash flows or the payments from them are reasonably on time?
Yes, sir. The payments are very reasonably on time. There is not delay in any of the payments.
I guess 90 to 120 days is what we're putting at. So
yeah.
Okay. And so just last question in my end, just bookkeeping items. If there is a broad breakup available of other current assets and non-current assets. They've gone up a little bit sharply. Just wanted to understand the broad breakup or the reason for that jump.
Sir, we have many. Yeah, please say, Prema. Yeah.
Sir, other current assets is basically the TDS and GST, input credit, like the TDS, TCS receivable and GST, ITC and all. So the main reason for it being so high is because in the September month itself, we had a lot of billing, sir, which actually we had to clear it in the month of October. So 30th September it is high. Again in October when we made the payment, it got knocked off and it is now in normal only. In fact, sir, if you see the other current liabilities also, that is also higher because again the GST payable and TDS payable will higher, sir. So that is the reason this too was higher. And as far as the other non-current asset is concerned, we had, since we got new orders and all, so this is for the EMDs, which we had to pay them, sir. So that EMD, that security deposit. And also, we enjoy CC limit, overdraft limit from banks. So we have to put FD as collateral. So that is the reason other non-current asset is high.
Understood. Fair enough. Thank you for the response, sir. And I can see through, there is a very, very well managed, financials also. And I hope, if you just manage good orders and some of them in time, I think we'll be doing quite well over the next couple of years. But I mean, financially, we are very, very, I would just, sir, suggest from my end that, as you've been doing that, just to keep an eye on the debt to equity ratio as far as possible.
Thank you very much, sir. Thank you.
Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address all the participants in the question queue, please restrict your questions to 2 questions per participant. The next question comes from the line of Smith Jain from K-Tech Family Office. Please go ahead.
Yes. So thank you again for the opportunity. Just 2 questions, right? One is a subjective one. I wanted your commentary on it. Next year is an election year in Tamil Nadu, right? And what we've seen, what our usual experience has been that during an election year, EPC companies are the companies which are more, which get affected the most, right? Because there's lesser workflow. The payments are usually stuck by the state governments. So how do you anticipate going into an election year next year in Tamil Nadu from a operational workflow standpoint? I just wanted to get a sense on that.
So normally this election year, what you mentioned is it will be a little bit slow. But what will happen in our case is normally in all EPC companies, we will be facing a slowdown in the Q1 once after this financial year completes and all these revalidation of the funds and the budget preparation, either if it is going to be a central government or state government, whatever it is, it has to be done. And there will be a break in, there will be a slowdown in operations in the month of April and May. So this is, luckily we Tamil Nadu people are having that elections during those times. So we will be having the election at May. So positively we will be having our code of conduct from the month of March, and April and May will be a slowdown for us. Definitely it will be a slowdown, but the slowdown will be in the announcement of new tenders or issuing of fresh work orders or something like that. But whatever work we have, we are liberal to execute the works, and there will not be any slowdown in those things. And obviously there will be a strain in some working capital during those times. So we have to manage, we have to plan in such a way that it is not spoiling our Q1 results. But that we have to plan. That it is always Q1 light. Our industry is always Q1 light. So we'll be managing in such a way that we don't face that challenge. But after June, after that new government is formed, they will be with full of zeal and enthusiasm to go for new infrastructure works and others. So that will be managed very well in the Q2. So that won't be a problem. So this is the scenario we have been seeing for the past several years.
Fair enough. And secondly, I mean, you've been very transparent that you don't want to take low margin orders, rather than you want to work on quality work orders, right? Solar EPC is a very commoditized business wherein we've seen that the margins are not only low, but like currently there is a lot of competition also. So as a segment, are you like betting high or betting big on this segment? And why are you wanting to get into a segment which is inherently a low margin business, right?
Sir, I understand that the solar EPC business, we have cutthroat competition, and this is not industry where we get the same margin where we get in the road EPC or other thing. But we thought we need some diversification also. We need some top line increase in our company, so we need to do good numbers. Even at a cost of 1 or 2% lesser bottom line, we are ready to do that. But at the same time, that will not be that easy. At any point of time, we are not going to dissolve anything in the bottom line of the main company or the EPC company or road EPC. We just wanted to have in addition to what we are doing. So that was the call taken by us.
Fair enough. And do we participate in state orders, state government orders, or central government orders is what we apply for, like in terms of tenders?
Sir, in tenders for the road EPC company, we participate in both state as well as central government, as well as public sector, everything. And when it comes to solar, we are concentrating 100% on private orders. We are not going for any government tenders.
Okay, fair enough. I'll call back in the queue. Thank you so much.
Thank you.
Thank you. The next question comes from the line of Rajendra Pasi, an individual investor. Please go ahead.
Hello, am I audible?
Yes, sir. Very much audible.
Sir, first of all, heartily congratulations to you on the great set of numbers, be it revenue, be it the bottom line or the working capital as well as receivables and debt. I guess we have managed everything really well and were able to bring those really good numbers. So congratulations on that part.
Thank you very much, sir.
I have like two questions from you. First, the amount of money that we are going to raise via QIP. So what will be the implication of the use of that money? Like, will it be mainly for the working capital or some part of it will go into capex? How we are going to use that money, and by when can we plan to, or do we have a plan in place to bring in the QIP? Like, will it be in H2 or are we planning it in FY27?
No, we are planning in H2 only. We are with the quantum, we have been doing the homework. We are getting a blanket approval for 110 crores, but it is not that we are doing the entire 110 crores now. We are planning to raise somewhere between 50 to 60 crores at the first tranche. And this is entirely going into the working capital. As you know that we are getting we almost have almost all the machines. If we are even going to buy some more new machines, we'll get a better rate of interest loans for the machinery. So we prefer having all these for the working capital.
Okay. And sir, the second question would be like we have 180 crore of debt as of now on our balance sheet. So what is the current rate of interest on this debt? On an average terms?
So it is from 8.25 to 9.25, 9.5 for both working capital as well as the term loan for the plant and equipment, everything.
Okay. I guess that's a great rate of interest. The last question would be, sir, like we are working on the solar EPC side as well, and someone earlier from me have already mentioned basically that it's a cutthroat sector and the margins are not very great now. So have we looked into like moving into, let's say, other sector such as transmission, EPC transmission side, so that that is at least in my understanding, that is a very good sector which may have, let's say, 4 to 5 years of very good earning potential up until maybe FY32 or 33. So are we looking into other sectors as well? Because I think that may also align somewhat with our work.
No, sir, we have not thought anything about that. We have not given any thought about that till now. We are concentrating on these 4 areas. We want some a concrete presence in these areas, then we will plan for any expansion or diversification or further going into other sectors or something like that. We just not want to touch heavy areas as of now. What we have touched, we want to make it concrete revenue generating sectors. Then we'll plan about that.
Okay, sir. Okay. That was all. All the best for the future, sir.
Thank you, sir. Thank you very much.
Thank you. The next question comes from the line of Ajinkya, an individual investor. Please go ahead.
My question are answered, madam. Hello?
Okay.
Yes.
So as there are no further questions, I would now like to hand the conference over to Mr. Ganesh for closing comments.
Thank you everyone for joining the conference call of AVP Infracon Limited. If you have any further queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
This brings the conference call to an end. On behalf of Kirin Advisors Private Limited, we thank you all for joining us, and you may now disconnect your lines. Thank you.
Thank you, everyone.